Welcome to JA Invest for Your Future. We are going to be talking about retirement and stock market basics as we get into this session. To kick us off, we are going to hear from Amy DeYoung with the First National Bank in Sioux Falls.
Hi there, everyone. My name is Amy DeYoung, and I am a retirement plan specialist at the First National Bank in Sioux Falls. And what my department does is we help business owners start and manage the retirement plans that their companies offer to their employees. And I get to work directly with the employees themselves while they plan for retirement, which was one of my favorite parts of my job. And also one of the main reasons that I'm here to talk to you today about why it's so important to start saving early for your retirement, even when you're in high school. And one of the biggest reasons that you want to start saving early is because on average people are living longer than ever before. You may find yourself living in retirement for 20 or 30 years, especially when people are living to 100. That could even be 40 years in retirement. And so that's a lot of time that you have to plan for, and starting early for your retirement gives you that time to plan. Another important reason to start planning early is it allows you the freedom to focus on what's important to you, and it gives you time to make changes if the things that are important to you happen to change. So some people in retirement, it's really important to them to be able to travel or spoil their loved ones or give back to charities that are important to them. Some people, it's important to be able to buy a second home or buy a fancy sports car or maybe 2 fancy sports cars, things like that. And so by starting early, you're able to allow yourself that extra time and that extra planning to be able to reach all of your goals in retirement.
In thinking about retirement, we know that the stock market is a common place people invest their money. Now we're going to take a few minutes to pause this video and talk about the stock market basics that are found on a handout your teacher will provide. The teachers can take the lead in the discussion since you know how much you've already gone over these topics in your regular course. One of my favorite things I learned from this program is that legend has it that a rising market is called a bull market because the animal attacks with his horns coming up, and a falling market is called a bear market because a bear attacks with its claws coming down. Hopefully you'll find a few other nuggets like that on that handout. Be sure to unpause to continue on after your discussion.
So, what steps can you take right now to ensure that you're saving for retirement early? One of the main things is when you're ready to enter the workforce full-time, during your interviews, be sure to ask details on that company's retirement benefits. Do they offer an employer plan? What qualifications are there to participate in their plan? Do they make any contributions as the employer? So do they give you money for saving for retirement? All of these questions can be just as important as to what your actual job is going to be. Now, if your employer does offer something called a match contribution, do your best to max this out because this is all free money and it can double the amount that you're saving. So if your employer is going to match 5% contributions, make sure that you're putting in that 5% if you're able to, because you'll actually be saving 10%. Another step, anytime you receive a raise, a promotion, or a bonus, those are all great times to reevaluate your retirement savings and increase your amount if you're able to. Another important step is to remember to be realistic about your savings. So never put yourself in a financial bind trying to oversave, because taking money out of a retirement account early can be very expensive between taxes, penalties, and fees that you might have to pay on that money. This is also where starting early can really help you out because you can feel less pressure to oversave if you started early. Now, if your employer does not offer a retirement plan, think about starting your own IRA, which stands for Individual Retirement Account. You can do these with most banks and most financial advisors. Just walk in. As long as you have earned income, you should be able to set up an IRA. The last important step is to make sure whoever you choose to work with is that someone you can trust, because you're giving them a lot of your future for them to help manage or look after. And so make sure that whoever you're working with is someone you can trust. One other thing to keep in mind, of course, is there are many successful adults in the world that still don't fully understand retirement accounts and things like that. And it can be overwhelming to try and keep it all straight. So just remember that no one was born knowing what a 401k is. So just stay informed, stay educated, and you'll be well on your way to a happy retirement. Thanks, everyone.
We are very grateful for Amy taking the time to share those messages with us. So now we're going to jump into a stock market simulation. The classroom teacher can start setting up the game on the back end while I share a little bit more about the platform. Hi, and welcome to the simulation portion of the JA Invest for Your Future Stock Market Challenge. My name is Risa, and I work with the Junior Achievement staff, and I'm going to take you through how to get on the platform as well as how to navigate it. The first thing is going to be that your classroom teacher is going to hand you a slip of paper that they have put your team number and your team code on. So you're going to walk through these steps one by one, and it's going to walk you through how to get onto the platform. So the first step is to just go to practice.futurefinanciers.com. Please note there is no www. You'll see in the second step, you have your class access code. So everybody has the same code. It starts with a C dot, 4 digits, dot, 4 digits. So make sure you hit the C and the dots in order to be successful, and then hit submit. This is what I like to call our landing page. We can come back here to this page at any time because everything opens in a new window. And just note that you will need to enable pop-ups. So if you need help with that, your classroom teacher can help you do that as well, but you will need to enable pop-ups in order for these to run properly. First thing you're going to do is click on Show Stock List. This is going to be a stock list specific to this game. So every time you play, your teacher's probably going to pick a different game. So it's going to have different stocks or different scenarios that happen with those stocks. And a couple things that I want to point out to you is that you want to look for IPOs, initial public offerings. These are going to be the very first sale of a stock by a company that's been privately held, but is now going to become a public company. So you're going to find right underneath on the left-hand side of that stock, it's going to list if it's an IPO. KAB in this specific example has an IPO date of day 6. That means that you cannot purchase or buy this stock until day 6. And if you want to be in on this IPO, you want to make sure to watch the days so that you don't miss out on it when day 6 comes. You'll also notice on the right-hand side that by the price, the I is there as a red flag reminder that there's something special about this specific stock. Likewise, we have dividends, and you'll notice that underneath the stock name on the left-hand side, you'll see an ex-dividend date and a dividend date. A dividend is a percentage of profits that are paid periodically to stockholders. So the ex-dividend date is the day in which the stock needs to have been purchased, and then you have to hold that stock through day 28 in this case. After that, you can do whatever you want with the stock. You can continue to hold it, you can sell it, etc. But in order to get the return of that profit, you have to have purchased the stock by day 24, and you need to have held it through that day 28 in this case. And then finally, when you're looking at that stock list in your portfolio, you want to make sure that you have diversification. That's owning different stocks in various industries that perform differently under a variety of economic conditions. So basically, you don't want to necessarily put all of your money into one specific stock or into one specific industry of stocks. And you'll notice the industry titles here on toward the middle of the page where you have, for this example, there's 2 in utilities. So instead of putting your money into both of those stocks, maybe you want to pick and choose some of the other industries that are represented, like durable goods. Because if something happens to that specific industry and if all of your money is in that specific stock, you could lose lose really big. But if it's diversified and you have a little bit in a variety, then hopefully some of those other stocks will balance you out and you won't notice such a huge loss along the way. Okay, so that's your stock list. And I would encourage every team member, if you have your own device, to pull this up so that you can be looking at this and pointing out different things along the way instead of having to toggle back and forth and all looking at one screen. So if you have that opportunity, I'd encourage you to open it up on more than one device. The next thing you're going to do is click on the Play Simulation button, which is going to open the display screen. So just a few things to point out here. First of all, on the left-hand side, you're going to see this symbol. A symbol is basically an abbreviation of that stock title. You'll notice that as you get going, you can click in to see all of the history of what has happened with that specific stock along the way. You're going to see the list of the price, which is the price of this specific day. And then you're going to notice if it changed. If it's at its ultimate low, it will be highlighted red. If it's at its ultimate high, it's going to be highlighted green. Obviously, you probably have talked about in your class, but we want to try as much as possible to buy low, sell high. So that's going to be a little clue regarding if it's low or high for that specific stock. In the center here, you're going to notice the rankings. Everybody starts with $500,000, so we all have that same net worth. And then as we go with the game, you're going to notice that you hopefully have a return on your investment and you're going to see that increase. My biggest tip for the simulation is put your money in the market. Your money can't make money if it's not in the market for you. If you don't actually put your money in the market, it's like putting it underneath your mattress, right? You're not going to make any money. You're not going to lose any, but you're not going to make any either. And then on the very right-hand side, you're going to see what other teams are doing. Are they buying? Are they selling? If they're buying, it's green. And if they sell, it's in red. So how do you actually buy and sell? What you're going to do is click on this open transaction screen, which again opens up a whole new tab. You're going to, first of all, pick the team that your teacher has assigned you, and then in the handwritten 4-digit code on the bottom, you're going to type that number in and click validate. And then you're going to type that number in one more time, just this first time. You have to do it twice, and then after that, it will remember you. So once you put your PIN in, you are going to have the opportunity to choose what you want to do. So click on the action. You can buy a certain dollar amount. You can buy all, which means you want to buy no matter, it'll just take all the money you have available and buy all of that stock. You can sell or sell all, and then you can do what's called an add stop loss or remove stop loss. You can really ignore that if you want, but a lot of students are interested in what a stop loss is. Basically, once you've purchased a stock, you can come back in and do a second transaction that allows you to put a stop loss on it. So if you bought a stock that originally cost $30 a share, and if you don't want to hold that stock if it starts declining, and let's just say you don't want it to go any lower than $25, if you put a stop loss on of $25, it will automatically sell that stock if it gets down to that point. You can honestly ignore it because I think it's better for you to monitor the stocks as you go, but it is there and you can experiment with it if you'd like to. So we're just going to buy a stock, and you can do one of two things. You can buy a certain number of shares of that stock, or you can do it by dollars. I like to do it by dollars because it just works better for my head in the beginning. So I'm going to buy $100,000 worth of shares for the DPM stock, and I'm going to hit submit. And this box on the bottom stayed green. If it happens to turn red, there's an error. And so read whatever that error says, and then you can fix whatever you forgot or whatever step went wrong. So I'm just going to quickly buy a few shares so that we can continue on. And I'm going to buy one more here, and I'm just making stuff up. But you guys can look at your stock sheet. And what you're going to notice is that it's showing how much money I have on hand down here in this green box. So I have $196,000 left, and I'm just going to decide I want to put all my money into the VCM. So if I click submit, you're going to notice that I have $26.03 left, and I'm just going to wait with that for the moment. This on the top right hand corner is going to show your portfolio. So for some reason, it's not showing my cash on hand. Normally it does. So it may or may not show on yours, but just know that your cash on hand will show down in this box, if not up here. And then it will show you what you've purchased and how many shares of that you have. Okay, so now what I want to point out is that if you go back to your display screen, this says that this page is automatically going to refresh once this ticker hits the 0. It's not actually going to advance the day until your teacher advances the game. So your teacher is going to click on next turn, and that's going to advance our game. And we're going to notice that our page is not going to refresh until this gets down to 0. So if you want to force it, you can just refresh your screen, and then you're going to notice that you've got your new information. So what you're going to notice is that we've had the prices have changed. So this is going to show whether it's gone up or down. And again, we have a couple at their all-time lows and a couple at their all-time highs. So that's how you see this. And you're going to notice that almost everybody didn't make a lot of money, but team 2, and again, I wasn't being strategic, I was just picking numbers, but we had a little bit of a return on our investment. And the other things I want to point out is that you can watch for your the breaking news down here on the bottom. So as the teacher continues to advance the days, you can see what day you're on. So we're currently on day 2. And now we've got some breaking news. So in this specific instance, we've got breaking news that Federal Nuclear Energy wins a permit to open new plants in Mexico. So when you see breaking news, you want to ask yourself, is this going to be good or is this going to be bad? Is this going to drive the shares up or is it going to make it go down? Think ahead. What's going to happen in 3 or 4 or 5 turns? If it's going to be something that maybe is not good, you might want to consider selling your stock. You might want to write it out and just see what happens. You might want to buy something now because it might be lower if we think it's going to get increase in price along the way. So those are some of the basics of the simulation. Just to have fun with it, start exploring, and enjoy your time in the simulation.